December 2008. The global financial system was already on life support. Banks were collapsing. Markets were crashing. Millions of people were watching their retirement savings disappear. Fear had spread across Wall Street like wildfire. Yet hidden beneath the chaos of the financial crisis was a secret so enormous that it would shock the entire world. A respected financier, a former chairman of NASDAQ, a man trusted by billionaires, charities, banks, and celebrities, had been running one of the biggest frauds in human history. His name was Bernie Madoff, and by the time the truth emerged, an estimated $65 billion had vanished. This is the story of how one man built the largest Ponzi scheme ever discovered, and why nobody stopped him until it was far too late. Bernard Lawrence Madoff wasn't supposed to become a criminal mastermind. He began like many entrepreneurs. In 1960, with just a few $1,000s, he launched a small investment firm in New York. The business grew steadily. Year after year, decade after decade, Madoff developed a reputation for innovation. His firm became an important player in electronic trading. In fact, many people credit his company with helping modernize parts of Wall Street. By the 1990s, Bernie Madoff wasn't just successful. He was respected, admired, trusted. He eventually became chairman of NASDAQ, one of the most important stock exchanges in the world. To investors, his resume looked flawless. If there was one person who understood financial markets, it was Bernie Madoff. At least that's what everyone believed. And that belief would become the foundation of everything that followed. Madoff's greatest product wasn't an investment strategy. It was exclusivity. Many investors couldn't simply walk into his office and hand him money. Access often came through referrals. Friends invited friends. Families invited families. The fund developed an almost mythical reputation. People felt privileged just to get in, and once inside, the results seemed remarkable. Not spectacular, not unbelievable. That's what made them dangerous. While other funds experienced massive swings, Madoff appeared to generate consistent profits. Month after month, year after year, even during difficult markets. Investors loved it. Financial advisors recommended it. Banks sent clients his way. The returns seemed almost perfect. And that's exactly what they were. Almost too perfect. Behind the scenes, there was a devastating reality. The investments largely didn't exist. The profits didn't exist. Many of the trades listed on client statements never happened. Instead, Madoff was operating a classic Ponzi scheme. The concept is surprisingly simple. New investors deposit money. That money is used to pay existing investors. As long as fresh cash keeps arriving, the illusion survives. Imagine 10 investors each contribute $1 million. Madoff now controls $10 million. Instead of investing it, he keeps the money inside the system. When someone requests a withdrawal, he pays them using money from newer investors. The investor receives cash. The withdrawal works. Trust increases. Nobody suspects anything. The scheme grows. And that's exactly what happened. For years, then decades, the operation became so large that billions of dollars flowed through Madoff's hands. Yet the foundation remained the same. A simple lie hidden beneath extraordinary trust. Not everyone believed the story. One financial analyst kept noticing something strange. His name was Harry Markopolos. After studying Madoff's reported performance, he reached a disturbing conclusion. The numbers didn't add up. The strategy Madoff claimed to use couldn't consistently produce those results. According to Markopolos, it was mathematically impossible. So he did what any responsible analyst would do. He alerted regulators. Then he alerted them again, and again, and again. For years, he submitted detailed reports explaining exactly why Madoff's operation should be investigated. Yet nothing happened. The warnings were largely ignored. The SEC conducted multiple inquiries, but investigators repeatedly failed to uncover the fraud. One of the largest financial crimes in history continued operating in plain sight. Not because nobody saw it, but because nobody acted. Then came 2008, the year everything changed. As the global financial crisis intensified, investors became desperate for liquidity. They wanted their money back. Immediately, withdrawal requests began flooding into Madoff's operation. Billions of dollars were suddenly being demanded. The problem was obvious. The money wasn't there. The system depended on constant inflows of new capital. But during a financial crisis, new investors disappear. The engine stalled. The illusion collapsed. On December 10th, 2008, Madoff confessed to his sons. According to reports, he admitted that the investment business was one giant fraud. The next day, federal agents arrested him. After decades of deception, the scheme was over. The empire vanished almost overnight. The destruction was staggering. Thousands of victims lost money. Families lost life savings. Retirement plans disappeared. Charities collapsed. Universities suffered major losses. Some investors had entrusted Madoff with nearly everything they owned. Many believed they were financially secure, until they discovered that much of their wealth had never existed. What made the scandal so devastating wasn't just the money. It was the betrayal. People weren't trusting a stranger. They were trusting one of the most respected names on Wall Street. And that trust had been weaponized against them. Bernie Madoff wasn't the first fraudster, and he won't be the last. His scheme succeeded for one reason above all others: trust. People believed his reputation. They believed his credentials. They believed someone else had already checked the numbers. But financial history teaches the same lesson again and again. When something appears impossibly consistent, question it. Because behind every major financial scandal lies the same hidden truth. The numbers tell a story. You just have to know where to look. Because every dollar leaves a trail. And sooner or later, someone follows the money. If you enjoyed this investigation, subscribe to Follow the Money Crimes for more stories of greed, deception, and the financial crimes that changed history.